cash coming out of assets it should be going into commodities and going into risk assets, the stock market, inflating a massive bubble there, a hyper bubble in real estate. This is going to burst. So we're going to burst, and we're going to see cash moving commodities, gold, especially silver. That's how I see it. I can't imagine another way, but we have to figure out where's the bottom. Where's the bottom of the Dow? We don't know. I think we're going to get a 1-to-1 ratio Dow gold. I think the bottom of the Dow is probably somewhere around 8,000. That could put gold at 8,000. That would mean a 10 to 15 ratio with gold silver ratio, with could be $800 silver at a 10-to-1 or 15-to-1 more likely.
According to insights from various market experts and institutional researchers, silver's role in the global financial markets may be about to undergo a significant transformation. Gregory Mannarino, an economic strategist known for his critical views on central banking and international markets, has emerged with striking predictions about silver's future. His analysis centers on a specific scenario where the Dow and gold converge at 8,000 points. Under this framework, he projects silver prices could reach $800 per ounce, based on a gold-silver ratio between 10-to-1 and 15-to-1. Recent market activity supports a bullish outlook, with silver recently touching $34.27, marking a new trend high. This movement, especially the push above $32.96, has generated a bull trend continuation signal. These developments are particularly significant against silver's historical peak of $50 per ounce. Silver would need to double from current levels to revisit its previous high, while reaching Mannarino's projected $800 target would require a dramatic 32-fold increase. InvestingHaven.com's research team has reinforced this positive outlook, confirming their 2024 silver price target at $34.70, which they expect to reach soon. Beyond these levels, they anticipate a rapid rise to between $48 and $50 from April to June 2025. Mannarino views gold and silver as unstoppable forces poised for significant price increases. His analysis highlights a compelling observation. Central banks are currently the largest buyers of gold, while simultaneously being the primary debt issuers, suggesting they are effectively betting against their systems by hoarding gold. The gold price prediction for the coming years remains directionally bullish, although some periods of weakness and pullbacks are expected. Projections indicate that gold prices could reach $3,150 in 2025 and approach $3,800 by 2026. Before we dive deeper into this video, don't forget to subscribe to our channel, hit the bell icon for notifications, and share this video with others.
Gold, silver, these are unstoppable forces in my view, and we haven't seen anything yet with regard to the price action of these assets moving forward. You have to understand, look, the number one buyer, and I urge people to do their own research on what I'm about to say. The number one buyer of gold in the world right now is central banks. Central banks are also the number one buyer of debt, the number one issuer of debt. Central banks themselves are betting against their own system by hoarding gold. Okay, I've been a proponent of gold and especially silver now since day one, saying bet against the system by holding gold, especially silver. As we move forward here, as the system is taken apart. Now, this rise in gold and silver. First of all, these assets, the price action has no bearing on reality based on soaring global debt. We are going to see these things skyrocket, and it's very simple in my view. I already put together a scenario. Everyone knows who follows my work. We got to understand that eventually we're going to get a bursting of the debt market bubble, hyper bubble. It's beyond anything we've ever seen before. It's being inflated on purpose. There's no error here, no mistake here. It's going to burst. When that debt bubble eventually bursts, we're going to see a movement of cash simply just from one set of assets into another. Now we have to say, what are the ramifications of a bursting of the debt bubble? It's too easy to understand. The artificially suppressed rate environment, the central banks buying it all, has done nothing but create unimaginable price action distortions across the spectrum of asset classes. Cash coming out of assets it should be going into commodities and going into risk assets, the stock market, inflating a massive bubble there, a hyper bubble in real estate. This is going to burst. So we're going to burst, and we're going to see cash moving commodities, gold, especially silver, and we're going to see, I think, a big move here with regard to cryptocurrencies as well. That's how I see it. I can't imagine another way, but we have to figure out where's the bottom. Where's the bottom of the Dow? We don't know. I think we're going to get a 1-to-1 ratio Dow gold. I think the bottom of the Dow is probably somewhere around 8,000. That could put gold at 8,000. That would mean a 10 to 15 ratio with gold silver ratio, with could be $800 silver at a 10 to 1 or 15 to 1 more likely. That's where we're going here in a worst case scenario. And I can't imagine where we can get out of it a worst case scenario here, because the debt hyper bubble is just a monster. It's a financial Frankenstein. I've been warning about this since day. It's not sustainable. And who makes up the difference? We cannot continue to run hyper ballooning debts and deficits. Who fills the gap? Who's more than willing to lend? It's, of course, it's the Fed in this case here, but it's the same situation around the world. Central banks have but one goal: to own it all, to issue their singular product to the world, to be our overlords. And that's exactly what's going on here. And people are just too either blind, ignorant, or just don't want to see this. And unfortunately, that's why we're seeing the BRICS alliance here. They understand it. Look, the only people who really don't get it are the people here in the United States. They always get blindsided because they have no idea what's coming. They're told how great we are, we're all rich. Look at that stock market, rah, rah, rah. No connection to reality. None
Now,
at all. The illusion of the market is very powerful, and people think there's a connection between the economy and the market. There's none whatsoever.
The message is becoming increasingly clear. BRICS is actively challenging the global dominance of the US dollar. At the 16th BRICS summit in Kazan, the alliance sent strong signals to the US and the West, suggesting that global financial power might not be theirs to hold forever. With the unveiling of the BRICS bill, a mock-up of a potential new currency, this summit marked a significant shift in the global economic landscape. Gregory Mannarino highlights this transformation, emphasizing that global power is shifting eastward, with BRICS directly confronting the U.S. central banking system. Mannarino predicts rising geopolitical tensions as this alliance pushes for a new financial order. He believes that the U.S. Federal Reserve, which has long maintained control over the global economic system through the dollar's reserve currency status, will not give up its dominance easily. Launching the BRICS currency proposal is a bold move that could reshape international trade and finance. It marks a paradigm shift in how the world's financial systems operate, with BRICS aiming to tilt the balance of power from the West to the East. This new payment system puts unprecedented pressure on the US dollar to adapt or face irrelevance. As BRICS continues to build momentum, the US dollar's position as the world's reserve currency is threatened, signaling the dawn of a new financial era. The challenge posed by BRICS underscores a broader global trend: the growing desire for a more multipolar world in which the dominance of the US dollar and Western financial systems is no longer guaranteed. With the BRICS nations steadily advancing their economic influence, the global financial landscape is entering uncharted territory.
This is tremendous what we're seeing here. But look, it's no surprise, I don't think. What people don't get, I mean, the general population, I'm not talking about the people that follow your work or the people that follow my work. We are, I mean, I don't know how to say this another way. I'm going to say it as straight and as hard and as direct as I possibly can. We are witnessing the end of an empire. We are going down. The United States of America, we are no longer the economic engine of the world. People don't want our products. People don't want our dollar. It's just over. Global dominance, this is being shifted over to the east. It's just done. Now, this BRICS alliance absolutely is a threat to the central banking system here over the United States. And what we can expect to develop out of this, unfortunately, is obviously we're already seeing it: war, more war. The Fed is not going to give up their stranglehold on the world financial system, being that the dollar still remains, as of now, the world reserve currency. Look, they're setting this all up here. Again, we have, well, you have to look at the global picture here and how central banks work. The system of currency destruction, artificially suppressed rates, probably negative rates coming pretty soon here in the United States and around the world. These are economic destroyers. So you have this collection of BRICS nations trying to say, you know what, we've had enough of this. We need a new system. And clearly that's where we're going. Look, how do I say this another way as well? People who follow, at least who have a functioning brain, realize we need a return to a constitutional money system. We don't need to be the crypto capital of the world. We don't need to have artificially suppressed rates, a weaker currency, period. And I mean, why are people surprised to see what's happening here with the U.S. trade deficit hyperballooning, with debts and deficits around the world ballooning, the world economy contracting at its fastest pace on record, central banks flooding the world? I mean, this is an incredible set of dynamics that are in play. No one should be surprised about what we're seeing here and how it's unfolded, because this is exactly what people that you and me and a lot of other people too have been trying to warn about for quite a long time. The system is being deliberately, systematically, and methodically taken apart. And the BRICS alliance is saying, you know what? We see this coming, so we need to do something about it. And that's why this is happening here. And I'll tell you something. People here in the United States are always blindsided because they're never told the truth. They're lied to. They're deceived. They're told where to look, how to dress, what to think. I mean, it's an amazing thing. It's a society under control. We're not free to do anything. We're free to listen to the propaganda ministry, the freaking CNBCs, the Bloombergs, the mainstream media, the television. Thank goodness and thank God for shows like this where people can get the truth, because it's the truth is what matters,
Thank
man,
you.
and we're not getting it anymore at all.
The ongoing shifts in the global financial landscape indicate a transformative period for gold and silver as critical assets. With the decline of traditional economic powerhouses and the rise of new alliances, the demand for these precious metals is likely to increase as investors seek safe havens amidst uncertainty. Central banks increasingly accumulate gold, reflecting a strategic move to hedge against systemic risks. If you found this video insightful, don't forget to like, subscribe, and hit the bell icon for more updates. Thanks for watching.